Hello, everyone. Welcome back to the Higher for Longer show. My name is Mason, and today we have a nice little video coming your way. This is just going to cover the news releases that took place this week. We are also going to take a dive into the cryptocurrency market and just check out some prices as well as some price action and some market news from that market specifically. With all that, let's get right into it. As far as data releases this week, we had plenty of employment and economic data come out. This is nice data to see and take a look at. That way we can draw some conclusions on what is currently taking place in the economy and hopefully try to get a little foresight into that. Firstly, here we have the JOLTS report. This is job openings fall 8.827 million with an estimate of 9.465 million. And the previous number was 9.165 million. So we have seen a slowing in the labor market by that data point. Moving into ADP payrolls, the U.S. August ADP non-farm payrolls rise by 177,000, with an estimate of 195,000, and the previous number was 371,000. Moving into GDP, we are up 2.1% this quarter. Pending home sales for July rise 0.9% month over month, beating an estimate of negative 0.6%. The previous number, 0.4%. So a very hot report coming from the housing market. Expected to be down over 0.5%, comes in at almost up 1%. Core PCE coming out, the key inflation measure for the Federal Reserve. Core PCE comes in at estimates at 4.2%. The U.S. August unemployment rate coming in hot at 3.8%, beating an estimate of 3.5%. Showing some signs of rising unemployment, shows that obviously people are losing jobs, and this is a negative looking indicator for the economy. Non-farm payrolls rise by 187,000 over an estimate of 170,000 and previous from 157,000. The manufacturing PMI coming in at 47.6, beating an estimate of 47 and rising over the previous 46.4%. So now moving into my thoughts on the data, the most interesting thing to me was the pending home sales report. While this is not an indicator that I'm personally watching a lot, it is interesting to see it come in so hot when the expected decline was supposed to be a negative 0.6, and we actually come in at almost 1% actual growth in pending home sales. That is definitely very interesting. And that was the previous number for that was 0.4%. So up 0.5%. That's very interesting there. Core PCE comes in at estimates. That's kind of the main inflation indicator that I'm watching. So looks like everything's just at consensus there. No increasingly notable disinflation in that sector. The unemployment rate coming in a little hot. That's for my own positioning. That is a positive because as unemployment begins to increase, the current policy coming out of our central bank will be less and less politically palatable. The PMI coming in a little hot was interesting to see. So the manufacturing sector still below 50, so still contracting, but growing and doing better. So now into my charts. Everything as far as inflation and Fed policy is obviously still very converged. We now have the Fed funds rate up above the inflation measures, so that is definitely showing the restrictive policy. As you can see, at the bottom there, the manufacturing ISM still contracting, but beginning to move back up towards the 50 line. And we get the services PMI coming out later on. We don't have that data yet, so it will be interesting to see if that begins to move below the 50 line, or if it can even move up. Obviously, manufacturing moving up, maybe we can get that out of services. So we'll have to see for that data point to come out, and then we can draw some complete conclusions there. Now, moving into the news cycle here this week for cryptocurrency, we have Grayscale winning its lawsuit against the SEC for its spot Bitcoin ETF review. Now, the thing to take note of is that this does not mean that their ETF is immediately approved. The court is just saying that the SEC is arbitrary and capricious in its ruling, and that is very interesting to see coming from the courts, seeing them criticize the regulator in such a interesting way. Now, with that said, the SEC then went on to delay its decision on every ETF that is coming, so the next decision date, I believe, is sometime in October. Until then, we kind of just get to keep chopping sideways, in my opinion. Probably just people speculating. We'll see what happens there. But the decisions have been delayed, and as you can see in the Bitcoin market price here, we had the giant run up in price after Grayscale won its court case. So a giant run up, and then pretty much Bart Simpsoned right back down to flat. That drop down obviously coming after the delays and everything from the SEC. So for me, in my opinion, and for my strategy, I'm actually okay with this coming back down in price. This nice dip, honestly, it's not even really a dip. It's probably turning into a head and shoulders pattern on a longer term. So could be even more bearish activity coming. I've seen on some standard regressions for Bitcoin anywhere between 20 and 25,000 right now, is 20 obviously being the low end and 25 being the middle of our range. The range between 20 and 30,000 is pretty much just chopping along, people staying in that range for now. And until the halving and until Bitcoin spot ETFs begin to actually come out and be accessible to investors, I don't see much difference coming. I believe we'll continue to chop along in that little range, that $10,000 range. I think that's pretty fair to say for Bitcoin until next year. I don't predict that we get giant breakdowns or giant increases. I just think we stay in this $10,000 range, and that's probably going to be it. Everything is taking a little longer nowadays, it seems like. I say longer in crypto terms. So the market cycles aren't breakneck. We're kind of just chopping along. The biggest thing people are being so trivial about in this current market is time. Timing is such an important part of markets, just because if you get the timing wrong, it doesn't matter if you were ideally right if you get the timing wrong in a way that messes up your trade. So you have to stay aware of time and don't get yourself overexposed in any direction, whether that be up or down. Your main idea and your main philosophy right now should just be to stay afloat and not get wiped out. The worst thing you can do right now is get wiped out. We're a year away from the Bitcoin halving, which is a major turning point in cryptocurrency cycles. And once Bitcoin goes on its run, then we know altcoins get to go on their run. So you have to be able to stay in the market and not get your positions wiped out. The main thing for every investor, in my opinion right now, should be to just stay afloat. The big narrative that I've seen moving currently in the cryptocurrency markets has been mostly around decentralized trading. Those low cap coins have really been doing well just because people have seemed to move away from centralized exchanges and are taking care of their own coins and trading on chain. This is interesting to see, and I believe that this is a narrative that actually could do some running as people try to move away from centralized entities after all of the centralized players that we had blow up over the most recent cryptocurrency bear market. people are a little more skeptical and people like to have their coins and their funds in their control. And by doing this, they move their assets into wallets and then interact on chain. And now that trading is on chain, that is something that people seem to be very interested in. And it's very interesting to see those coins moving. And I believe they have legs to continue to run. And I think that could be a narrative to watch in the next bull market. I'm currently not positioning myself in that area. I'm still trying to accumulate my long-term plays and my big assets. But as we move into different portions of the market cycle, as we eventually move into bull, I believe that there could be an area there to actually take advantage of. Because those coins are low cap, they will go off later in the cycle, and their low market caps will allow for large percentage returns. So definitely a narrative that I will personally add to my list to watch. And the other thing that I want to bring up, just because talking about on-chain trading, I'm going to talk about the Venom testnet. This is a testnet that I've personally just been playing around in, and I've been enjoying. The Gravix decentralized application is on-chain trading for the Venom network, and in my opinion, it's pretty good. Obviously, you don't have the liquidity of the major exchanges such as Binance and Bybit and the other large exchanges that receive lots of volume, and that comes with its limitations and makes it harder to hit your exact numbers, so it's harder to place your trades on short-term time horizons. But if you can be directionally right, you can still obviously take advantage of move. So the on-chain trading on the Venom network, in my opinion, has been all right. It would be even better, obviously, as more liquidity comes online, but things like that just take time. The Venom network has been great in my... With all that said, that is a current news breakdown as well as some current indicators, a look at my own personal charts, and some analysis on the price of Bitcoin. I hope everyone has enjoyed the video. If you did, please like, subscribe, share it with a friend. Anyone that checks these out, I greatly appreciate it. Thank you. Have a good day.